Hmm. How do you view the market then for investors? Because let's say if somebody has that spare cash and they're thinking that, look, prices are so low, I might as well invest. I mean, would you advise that? Because, you know, even if you look at rental yields, they're very poor, especially in metros.
So let's look at the overall economy. Indian economy is a last year $2.6 trillion economy. Savings is household savings is around 19%, which means around $480 billion. In this, nearly 58%, which is 280 billion, goes into real estate. So we're talking of the biggest asset class in the country, $280 billion annually. I believe investments into real estate is safe compared to many financial instruments, including mutual funds. Firstly, the tangible nature of the assets. Secondly, there's a lot of psychological comfort on security and satisfaction, which someone gets when they invest in real estate. Today, everyone post-COVID is looking at settling down. Real estate can give you that. Real estate also gives you consistent returns. It's a lot more predictable. You don't see Black Mondays and Black Fridays in real estate where your prices drop 15% in one day. Even if prices have to drop 5 or 10%, it happens over a period of maybe 1 or 2 years. The real estate market's a lot less volatile compared to the financial markets. There are tax benefits one gets. There is easy leverage available today. So you have the benefits of passive income plus potential for appreciation. But one needs to keep in mind that real estate is a long-term investment. You get a lot more control over your portfolio, and it helps in diversification from other asset classes, and market risks are a lot lesser in real estate when compared to the other financial instruments.
All right. Well, yeah, definitely more predictable compared to other financial instruments. Even if, let's say, prices crash, they don't crash in just a matter of 1 or 2 days or weeks. It takes a little while. So there is that bit of predictability. Now, you know, despite everything, despite the fear, we are seeing quite a rise in real estate sales. What do you think is leading to this? And do you think that all the offers, freebies, discounts, schemes given by realty developers this Diwali are worth lapping up?
So the last 2 months, we've seen sales go back to a 55-60% of pre-COVID numbers. Multiple reasons for this. There is better sentiments in the market, lower interest rates. Interest rates are currently at a 15-year low. Lower prices. Developers are giving anywhere between 5 to 15% discounts. There is a lot more ready-to-move in projects today than what is available before. Some states like Maharashtra have significantly cut down stamp duty, and developers today are giving a lot more discounts than giving freebies. Previously, developers would give freebies, cars, gold coins, all that kind of stuff. Today, that's becoming more of discounts, which is kind of attracting the buyers. It's very important that one compares the post-COVID era from the post-global financial crisis era. Back then, valuations were very, very overheated. Today, the valuations are a lot more realistic. Back then, the markets were dominated by speculators. Today, the market is a lot more dominated by end users. It was a seller's market back then. Today, it's a buyer's market. A lot more tax benefits now. Also, the interest rates, which I spoke about, we're looking at a 15-year low in terms of interest rates. Back then, all developers were building luxury, big apartments. Today, developers are building a lot more relevant, compact apartments. And also, what is selling today? The apartments which sell are apartments which are in the right location, high quality, financially feasible, reputed, built by reputed developers. Preference obviously is for projects where there is an assurance for delivery. What we also believe is during festival times, we've seen it every year, there is a lot more fast tracking in decision making. And one needs to keep in mind that the number of new launches are also kind of reducing, and then supply reduces automatically over a period of time, prices will start going up. And the gap between rental yields and borrowing costs have also kind of come down as interest rates kind of come down. And we're also seeing more interest coming from NRIs and joint families looking for apartments. So all these reasons are leading to whatever we're seeing in the last 2 months. Also the pent-up demand of not much of sales happening in the second quarter of the calendar year, which is leading to much more increased demand in the last 2 months.
So finally, what's the verdict then for somebody who's been looking to, buy a home for themselves? Is this the best time?
So this is surely a good time to buy a home if you're looking to buy a home as an end user. I would strongly recommend end users to buy homes over the next 2 to 3 quarters. One, prices are realistic. Two, prices are reduced. Like I mentioned, home loan rates 15-year low. There is definite affordable synergy in the market. Developers today are also offering attractive payment plans and schemes. There are some payment plans which could, when you convert it into pricing of a home, could easily be 5 to 7% of the actual price. Time value of correction has already happened over the last 4 5 years. Prices haven't gone up, which also means that given inflation, time value correction has already happened. Developers are offering discounts, like I mentioned, 5 to 15%. One needs to keep in mind that rack rates, when you go to a developer, he's still keeping the same. Discounts are typically offered for buyers who are serious, and that also at the last stage. So it's important for you to show the developer that you're a serious buyer and you're at the last stage of taking a decision. Room for further big, massive price drops looks limited at this point of view. One needs to keep in mind that developers are already operating at very low margins, and chances of further price reduction going down looks is not likely, particular in the affordable and mid market where prices margins are already low. I feel overall the price curve may move up upwards once the virus is contained and the economic recovery sets in.
All right, so it is definitely a good